All right. Hello, everybody. Thank you so much for joining us today for the webinar. Just a little bit of housekeeping. We will be recording. So if you do not wish to be part of the recording, please feel free to leave your camera off. We do ask that during the presentation, you do keep yourself on mute, but during the question and discussion periods, you're more than welcome to unmute yourself. If you do not feel comfortable doing so, please feel free to put your questions in the chat and I can relay it to Alexia. Otherwise, let me introduce her. Alexia Kitoko is the founder, speaker, and financial literacy educator at 123 Finance with over 10 years of experience in finance across France, Luxembourg, and Canada. She has worked with prominent institutions like Naxos Wealth Management and RBC Wealth Management, providing financial planning services at high net worth individuals. Alexia is now dedicated to empowering women through financial literacy with the knowledge they need for financial confidence and independence. Her mission is to make financial education accessible, engaging, and easy to understand. Passionate about supporting diverse communities, including Black, Indigenous, people of color, and French-speaking communities, Alexia is deeply involved in financial literacy, entrepreneurship, and mental health. Outside of her professional life, Alexia has a love for travel, dancing, and boxing, pursuits that fuel her passion for a balanced and fulfilling life. Take it away.
Oh my God, what a presentation. Thank you so much, Kylie. So yeah, you guys already know everything about me, except that, yeah, I'm Congolese, born and raised in France. Super happy to be here today. My goal is to delete and erase any past financial generational trauma, passed from generation to generation. And I'm excited to be here today. I have a love for empowering underserved communities through fun and interactive financial literacy, especially women and women entrepreneurs. So I'm here today to have a conversation together about taking back control, financial basics for ambitious women and entrepreneurs. So whether you're already an entrepreneur, whether you're an aspiring entrepreneur, this is for you. And you have my QR code here. I also put my link tree in the chat where you can follow me on LinkedIn, Instagram, follow all of my different events coming up. I have a Francophone event coming up in person. I have an in-person English speaking event coming up on November 13th for Financial Literacy Month, which is in November. And another amazing, great online workshop this coming Saturday online. So yeah, just don't hesitate to follow me on my social media. I share all of my events. They're all free usually because I work with nonprofit organizations such as Sparrow, university, social class businesses. They pay me so that people like you can access financial education for free, which is really, really, really needed. Excited to be here today. We're just going to start with a land acknowledgement. So I'm based in Toronto. If you're not based in Toronto, feel free to do your own land acknowledgement. We recognize that the land on which we stand is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Haudenosaunee, and the Wendat. Today is the home to a diversity of First Nations, Inuit, and Métis people. This region is covered by the One Spoon, Wampum Alliance and treaty between Aboriginal nations to share and preserve the resources of the Great Lakes in a spirit of peace and harmony. We're grateful for the opportunity to live, work, and connect on this land and are committed to honoring the ongoing governance and teachings of Aboriginal people, while fostering respectful and reconciliatory relationships. Then an ancestors acknowledgement. I would like to take a moment to honor the ancestors who came before us. We recognize the wisdom, strength, and resilience of those who paved the way, shaping the path we walk today. We recognize that the sacrifices, struggles, and victories of our ancestors are intimately linked to our lives today. We carry their legacy in our actions, words, and dreams. With this recognition, we express deep gratitude for their constant presence and guidance, honoring their contributions and spirits that continue to influence our path. And then last but not least, a quick disclaimer that I'm a financial literacy educator. I'm not a financial advisor. I can't recommend you to invest in this and this, or I can't recommend you to do this or this. If you need financial advice, you need to seek for financial advisor within your bank or within an independent financial advisory firm. And yeah, we're just going to talk about financial literacy today. So the agenda of today is we're going to talk about money mindset, how to shift your money mindset. And we're going to calculate your financial number. It's a little bit of an interactive exercise. So I hope you like it, and it's going to be mind-blowing for you. We're going to look at how and why you need to separate your personal finances and your business finances, and how to do it, how to choose your accounting software, because I'm not an Excel sheet girly. And we're going to talk about budgeting strategy, the personal side, whether you're you have a 9 to 5 and you have a side hustle, or you're trying to create your new business. And we will also talk about the business strategy and emergency fund, of course. And last but not least, we will talk about some practical tips that were super important for me when I launched my business. So I thought I would share. So first of all, I would love for you to put in the chat, how do you feel about financial literacy? It could be an emoji, it could be a feeling, it could be scared, I feel scared, or I feel joyful, or I feel emotional, whatever. Share a feeling or an emoji. So financial literacy is the knowledge and understanding of various financial concepts, whether it's about budgeting strategy, insurance, paying debt, credit score, credit card, how to save, how to invest. This comprises all of that, right? And it's about understanding your situation and having the tools to build wealth in the future, and to build also a good relationship with money. Because there's the thing about building generational wealth. So you build a company and you transfer goods and all that. And the other thing is about building generational wellness. So you transfer a financial positive mindset about money, an abundance mindset and all that. It's not just about transferring money, okay, and building money. So I see some reaction in the chat. Pam is feeling excited to learn. Dana, it's a necessity, absolutely. Better. I used to sob every time I met with my accountant, and understanding I can also know more. Yes, absolutely. There's always more to learn, and if you don't know, you need to seek help, the proper help. Tiresome, okay, Donna, we're gonna try to change this, because finances can be fun, and it's important that you make it fun, because this is your life, right? So another thing that's super important for me, it's money affirmations. I do what I do. I wake up every morning changing people's life, just because I grew up in a family where we didn't talk about money that much. It was either taboo, or we talked about money. My mom told me about how you have to save money, but it was more coming from a scarcity mindset, meaning you have to save money just in case something happened. We never know. One day it can be the war, whatever. So it was not coming from a mindset of abundance, of building wealth. That's why it's important for me to do that first step. Money, shift your money, and understanding what's your relationship with money. Do not hesitate to let me know in the chat, what do you think is your relationship with money? Is it more like, are you avoidant? Are you positive, abundance, scarcity mindset? And those affirmations are super important. It's not only saying affirmations just to say affirmation. You have to say those affirmations every morning in order to shift your mindset, and finally be able to make the plan to achieve that state, and not just a mindset state. Okay, so Pam is saying, I'm confused relationship with money, a bit of scarcity and seeing money as a tool. Yes, we need to see money as a tool, absolutely. And we need to shift from scarcity mindset to abundance mindset. Okay. So I will say those affirmations. Do not hesitate to repeat after me on your own. You can stay muted, but it's important to read those affirmations and see what it is about. So money is drawn to me, and I am drawn to money. I am capable of overcoming any money obstacle that stands in my way. I'm always discovering new sources of income. The more I focus on joy, the more money I will make. I'm on my way to becoming wealthy. Everything I need to build wealth is available to me right now. I breathe in abundance. I am my best investment. I move from poverty thinking to abundance thinking. I have a beautiful relationship with money. Gratitude builds the bridge to abundance. And every action I take will plant the seed for future wealth. Amazing. I love that Jenny is also using those affirmations on the morning meditation. That's really needed. Another thing why it's important to talk about money affirmation, a lot of people, they will tell you that knowledge is power. I think this is true and false at the same time, because a lot of people, they know what is a budgeting strategy. They know what is a TFSA, but they don't use it the way they should use it, just because they have a certain type of relationship with money and they don't have the right mindset. So that's why in my talk in general, I love to start to talk about money mindset. Then I'm delivering some content, and then there's the call to action. You have to take action and do the thing. But sometimes you have the information and you just don't know where to start because you don't have the right mindset. Either you're scared, scarcity, or you are avoided. So that's why it's really important to shift your mindset and work on those affirmations every day and do a plan to achieve financial wellness. Okay, we're going to do a small exercise. I'm going to give you, let's say, 5 minutes. So you have 6 questions. The first one is the age you would like to retire at. So it's really simple. I'm going to explain, but just do question by question, and it's going to be simple. Take a piece of paper and do it. It's really, really simple. First question, age you would like to retire at. Second question, the amount of money you would like to have annually during retirement. Let's say you go out retirement and you want 60K per year to live as a retiree. Question 3, your life expectancy minus the age you would like to retire at. So for women in Canada, the women age expectancy is 84. So I'm going to put it in the chat, 84. Okay. So life expectancy minus the age you would like to retire at. Question 4 is annual amount from question 2 multiplied by number of years from question 3. And the number 5 is age you would like to retire minus your age. And the last question, the amount from question 4 divided by the number of years from question 5. And this number that you will calculate is represents the amount you need to make annually from now until you retire, just to fund your retirement. Okay. So I'm going to give you, let's say, 5 minutes maximum. And please let me know in the chat when you're done so that we can move on. And we have a lot to cover today. So put your number in the chat as soon as you're ready. And then after, I'm going to show you my number and we're going to talk about it. So I hope it's clear for everyone. Yeah, I'm going to give you some time and put your number in the chat as soon as you're ready. Jenny, 1.3 million. The final result? Wow. Let's go, Jenny. Let's go. Donna, 330,000. Okay. So I'm gonna let people know for Donna and Jenny and even for the rest. So keep doing it. But so the number you got, the final number from question 6, it's supposed to be the number that you need to make annually from now until you retire to fund your retirement. So Donna, every year starting now, let's say starting in 2026, every year you need to make 330,000 K every year until you retire to fund just your retirement. I'm not talking about buying a car, buying a property, traveling, just to fund your retirement. And same for you. Dana, I think you modify 164. Oh, no. Okay, so Dana, 164K, Donna, 100K, Jenny, 1.3 million every year until you retire. So let me know in the chat, how do you feel about this number? And then I'll share my result too. So the age I would like to retire is 50 years old, question 1. Then question 2, the amount of money I would like to have annually during retirement is 120K per year. Number 3 is the life expectancy minus the age you would like to retire. So for women in Canada, it's 84 years old, the life expectancy. So 84 minus 50, the age I would like to retire, equals 34 years old. Then the annual amount from question 2 multiplied by number of years from question 3. So 100K times 34 equals $4 million. And then question 5 is the age I would like to retire minus my age. So I would like to retire at age 50 minus my age 34. It's 16 years until I retire. And last question is the amount from question 4 divided by number of years from question 5. So 4 million divided by 16. It equals 255K. So starting in 2026, me, Alexia, I need to make 255K per year for 16 years until I retire to be able to fund those 120K per year once I retire. So what that tells me is that I'm going to have to do a lot of those financial literacy workshops. So let me know how you feel in the chat. Jenny's like, this number feels good. Okay, so Jenny, yeah, you put 103 million, let's go. So you're saying that this number feels good. I'm excited to know more a little bit after. Dana, stressed is how I'm feeling right now. Not sure if retirement is a good idea at my projected age of retirement. And Donna, so if it's 2 years to retirement, am I supposed to be good if I have 330 times 2 today? So yes, absolutely. If you did answer all of the information, Donna, like you retire your proper age and you're retiring 2 years later, yes, this is you should be good. So this exercise is not made to make you stress or feel worry. It's just to make you down to reality. Most of the people, they never calculated their financial number. And then they go on retirement and they're like, okay, I'm going to retire. Now I need to spend my money. But we need to plan in advance. So my take is that now that you know your financial number, you need to take action. And I'm going to give you, we talked about the mindset a little bit. Now I'm going to give you some content and then some calls to action. But there's some way. We need to start as soon as possible. The best way to start was yesterday. The second best time to start is today. Okay, so Dana and all of the other, do not stress. We just need to take action and not be avoidant, because otherwise, if you avoid it, you will not have enough money when you retire. If you take action now, you might be fine actually. Okay, but it's just a matter of being aware about what's going on and what we need to look at. So coming back to being an entrepreneur and why it's important to separate your personal finances and business finances. It's important for multiple reasons: financial clarity, accounting and tax simplicity, credibility and professionalism, and legal protection. The legal protection, it's only if you're like incorporated, because if you're a solopreneur, whether you have a business account and a personal account, it's still you as an individual. You are your business. It's the same legal legal thing. If something happened as a legal issue, it's going to be you as an individual. But if you're incorporated and then you have a business account, personal account, then it's two different people. And if there's something, they're going to attack the company's personal assets and all that, not yours. Okay. But why it's important to have separate personal finances and business finances is just because you don't want to, there's things that you can declare and deduct from your income tax as a business owner, but not everything, right? And you want to have clarity. You don't want to have within your same bank account money from clients, and then you have your Spotify, your Netflix, and then your groceries from Loblaws, all of the same account. And then when you try to do your accounting and taxes and talk to an accountant, he's in the account and he's looking at your personal finances, your personal stuff, when he shouldn't be. He should be only looking at your business stuff. So for clarity, please open your personal account wherever you want. Open a business account at your bank or at an online bank. There's a lot of business accounts that you can open for free. And it's important to have this clarity of, okay, I have money coming from my clients at an account, and then all of the related expenses from this account. So those are the practical tips, right? Use a business account with your corporate credit card, credit score. Keep the account separate for clarity. You don't want to have to explain to your bookkeeper why is there this personal thing is on your business account. So keep it clear and separate for your clarity and confidentiality too, right? If you hire a bookkeeper or accountant, you don't want them in your personal stuff. Also, another thing, when you have two separate bank accounts, you need to pay yourself. So if you're incorporated, you can pay yourself with a salary or dividend. And if you're not, if you're sole proprietor, just as me, you just do a transfer, right? From your business account to your personal account, and from your personal account, now you can go and buy things at Loblaws and Amazon and all that. So choosing an accounting software. I know some people, they might use Excel documents with all of the money coming in and all of the expenses and all that. I'm not a huge fan of it just because of the manual error that you can do on an Excel sheet. It takes a lot of time. And I'm just a huge fan of gaining time and automate everything, and having an accounting software where you can have all of your incomes, expenses, edit reports automatically. If you have an Excel sheet, you might have to do the calculation by yourself. It's pretty annoying. With an accounting software, you can automate all of the invoices and send it automatically to your clients. So as soon as the client paid, because your account is linked, then it goes to your accounting software that client paid. It helps you for to follow up regarding the invoices too, right? I see a lot of entrepreneurs hustling. I do business, but not even looking if the clients are paying properly. Some clients haven't paid you for a year, for 2 years, and you'll hear, keep hustling, but the money is not growing. And usually that's the difference between business before 5 years and after 5 years of existence. If you're not looking at your numbers, if you don't know what's going on, you don't have a budgeting strategy, your business might not go after 5 years, right? Or you might not be able to fund your retirement with your business just because you're not in your number. If you're in your numbers, especially with an accounting software, you can see every month the expenses, and either, okay, I need to reduce the expenses or change of people I'm working with, or I need to increase my my pricing. Okay, but if you're not looking at your number, you might not increase your pricing, or you might just increase your pricing but randomly instead of thinking about how much do I need for my retirement, for my living. Then I can reverse engineering and say, this is the amount of product I can sell a year. So this is the pricing I'm gonna adjust. Okay. So there's few accounting software you can see on the right of the screen. Mainly four that I know: QuickBooks, Wave, Xero, and FreshBook. So QuickBooks is the one I chose, but everyone is different. You have to find a solution that's going to work for you. So you have to make a list about what you're looking for in accounting software for now and in the future, because you can have a business now and do certain things and have a need for certain things. But let's say, what's your vision in 2 years, 5 years for your business? Me personally, I have a vision for my business in 3 to 5 years, which is different from what I'm doing this. So I had to implement this in QuickBooks in my accounting software search. So for example, QuickBooks will allow you to automate invoices and expenses. You have your bank account connection automatically, and you can tax track and do your report generation. So you click, you can personalize, customize your reports, and on your reports, you see automatically how much money you gained for the past year, how much you spent, and all that. There's another thing for QuickBooks. For example, I know that in the future, I can upgrade and I will be able to do payroll if I have a employee in the future, which is my willing. Another thing, I'm willing to expand outside of Canada and be paid in USD one day. So that I know that with QuickBooks, you can upgrade and do it. With some other accounting software, you might not be able to do it. With Wave, for example, I tried QuickBooks, Wave, and Xero. You're not able to do it. That's why I chose QuickBooks. But your life can be different if you own a restaurant and you're based in Toronto and you don't necessarily need to be paying in USD, or if you're a freelance in marketing, your life might be different. So you have to write it down. Help yourself with ChatGPT to see, hey, this is what I'm doing, this is my business, this is what I need from an accounting software. What do you recommend me to do to search for the right accounting software? You have to write it down for your situation and then make your choice. So Wave, QuickBooks is not the cheapest option, but me as a financial literacy educator, it was important for me to choose a powerful software for finances, just because I love to be in my numbers. But it's not the case of everyone, right? And also with QuickBooks, most of the accountants and bookkeepers, they will work with QuickBooks. Wave is also a strong option. It's just that with the free version, you have to manually input the transaction from your bank account to the software. And I'm not a huge fan of manual things. However, if you have someone working for yourself, why not? You have free billing. You can track your income and manage your expenses with Wave, and it's ideal for small businesses. Then Xero, I tried Xero. It was a powerful tool. It was it was really similar to QuickBooks, but I did prefer the ease of use of QuickBooks, but Xero is also a nice option. You have advanced inventory and payment management features. They have a lot of YouTube videos, so I would advise you to look at all of those YouTube videos about Xero, QuickBooks, and compare them. It's just 20 minutes. You look at different videos, and then it can also help you make your choice. Last but not least, FreshBooks. It's a simple interface. It helps you time tracking and automate all of your billing. So that's a good option too. Why using an accounting software? I think I told you everything already. It's going to help you save time with automation, fewer errors in financial management. If there is an error, you can quickly modify it. But using an Excel sheet, if you make a manual mistake, and then 1 year after you do your tax return, and there's a mistake in your tax return, indeed, it's a huge thing, because the government might come back to you and you might have to pay for penalties or taxes. Okay, So make sure you don't make errors. And the best way to do it is to use an accounting software. It will help you and be simplified for preparation of your tax returns, whether you're doing by yourself, you're just going to the report. Everything is noted the same way CRA expecting it. So you just have to copy paste the amount. And if you're working with an accountant or bookkeeper, same thing, it's simplified. You just have to give them access to the accounting software, and they will do it for you. Whether if it's an Excel sheet, you might have to give them the Excel sheet, and they might have to go through and verify everything and ask a question. It's time consuming. And also with the accounting software, you have a better cash flow monitoring. Did my client pay me all of my invoices this year? Yes or no? You have the direct information on the software. So there's multiple reasons and criteria to assess when you choose your accounting software. We talked about it already, but it's about the ease of use. Is it easy for you to use on your phone or the web version? All of that is a good way to see, are you comfortable with it? I tried another software, for example, I tried Zero. I felt a little bit less comfortable using it. So I was like, okay, let me go with the one that's easiest to use for me. You need to look at the essential features, whether it's invoicing, expenses, and income tracking, tax management for your taxes, for GST, QST, HST, any financial report, payroll if you have employees. This is super important, as well as the CRM and all of the integration. You might use an accounting software, and in the future, or even now, you might use a CRM or another software or whatever. You have to check those integration. For me, QuickBooks, I saw that it was integrated with a lot of different other software. And that's important, right? Because if you plan to use HubSpot in the future, but HubSpot and Xero or HubSpot and QuickBooks are not integrated together, you might have to use another tool like Zapier to do the integration in between those tools, which is pretty annoying, and sometimes it can be costly too. So you have to plan this in advance. If you already know what kind of CRM you want to work with in the future, think about it and integrate it in your assessment. The three last one are pricing and flexibility. You have to find an option that's suitable to you. What's your budget for this accounting software? Is it more $5 a month, $30 a month, $150 a month? It has to make sense for your budget too, right? Don't go for a software because someone tells you that's the best, but it's not fitting your budget, your needs, and in your situation right now. You can also, with a lot of software, you can start with the free version, the trial, and then upgrade after. That's also a great option to start. This is what I did with Xero. I started for free with the trial, and then I watched all of those YouTube videos, and that was perfect. Customer support and community, super important. Are they available through chat, phone, and email? Are they available 24/7, only on weekdays, or only the weekend too? It has to make sense for you, right? Last time I was looking at a software, not for accounting, but my all-in-one software. They were not available on the weekend. And for me, that's important. Sometimes I work on the weekend. I don't want to have, if I have an issue, I don't want to have to wait 2 days to get an answer. So that was important. You have to consider it. Security and compliance, super important too. Is there automatic data backup? Is it compliance with Canadian tax regulations? Do they have data encryption and protection of sensitive information? Usually they have it, but it's something you wanna look at, especially if it's a not known accounting software. So yeah, all that to say that I highly encourage you to choose an accounting software, look at those YouTube videos, and choose one your future self will thank you. Now let's talk about budgeting strategy and emergency fund. So we're going to talk about personal budgeting strategy and business budgeting strategy. A budgeting strategy for me is a powerful tool. Some people, they say, no, it's limiting. I don't like to have a budget strategy. I feel limited. But the truth is that You have power about your expenses and how you spend your money, and you can pay yourself first instead of paying other founders' dream, instead of paying Starbucks founder dream, or Spotify founder's dream, or Netflix founder's dream. You have to pay your dream, whatever is your company. Me, I'm deciding to pay 123 Finance dreams first. Okay, so if you don't have your nose in your nose on your expenses and how you spend it, you're paying other people's first, and we don't want that. Okay, so the first step before even having I mean, it's part of the budgeting strategy, but the tip for me would be to build your emergency fund first. Can you let me know in the chat who has an emergency fund? Yes or no? I'm just curious. But the emergency fund is like an amount you have saved on your saving account, just in case of unexpected expenses. So whether your laptop or your phone is dead, you have to buy another one. Your car needs maintenance, or someone is sick on your family, and you need to help them, or you need to travel to go help them. All of that are unexpected expenses, and you have to have an emergency fund to fund it. I will recommend between 6 months and a year of monthly expenses. That would be a great start. So I see some people have emergency fund. I love it. Pam, no, but need one. Yeah, absolutely. So I'll show you a little bit how you can do it, and Dana, how you can grow it. You say yes, but it's small. So let's start. Personal budgeting strategy. A lot of people, they will tell you that the budgeting strategy, it's your income, and then you do all of the expenses, and what's left is your savings. This is not what I would recommend. What I would recommend is the next one, which is you receive your income. Usually, if I tell someone how much do you earn, they know, especially if they are in a 9 to 5. If you're an entrepreneur, it's a little bit different, but you can still go to your Excel and or accounting software and see how much you're making money. But when I ask about the expenses, it's all over. It's like, oh, I don't know. I don't know how much I spent, right? So you have your income, and then you decide to save, and what's left is actually your expenses. So it's called pay yourself first. I was talking about it earlier. Pay yourself first instead of paying other people's dream. Okay. So you have your income, you receive your income, you do your every month or every 2 weeks, you do your savings, and the left is what you need to spend. And then when you have your spending, then you need to choose. If there's no spending anymore, you need to choose what's a need, what's a want, and if I can't afford it, then I will just do it next month. Okay. So here, for example, you might tell me, yeah, but Alexia, how do I know how much I'm supposed to save? So there's a quick budgeting strategy that you can use. It's the 50-20-30 rule. So it's not working for everyone, especially for the people who have like a small amount of revenue. But it's a good start, and you can always customize it. So what it says is that from all of the income you're receiving, you need to allocate 50% maximum of your income to your needs, 30% maximum to your wants, and 20% minimum to your savings. So the savings, it also includes, it's not only saving, it's savings and debt repayment. So let's say if you have a debt right now, those 20% of your monthly salary, it should serve to pay your date, your monthly date, and or save money. Okay. 50% maximum of your needs. So the needs, it's everything related to rent, groceries, bills. Those are, there are needs, because if you don't do it, it's going to be critical, right? If you don't pay your rent, you're going to be out. If you don't pay for your groceries, you're not eating anymore. You could die, right? So this is how you know those are needs. And the wants, it's more like buying a new phone, buying a laptop, going travel and all that. It's really nice to have, but if you don't do it, it's not critical. It's just something that you can do after, and you can decide to have either instant gratification, meaning I want to go to the restaurant now, I want to buy a phone now, or delayed gratification, meaning I'm not buying a phone now, but with this money that I'm going to save and invest and grow, in the future, I will fund my retirement, or I will buy a house, or whatever. I'm going to invest in my business, whatever, whatever. This is delayed gratification. Okay. Another alternative to the 50-20-30 is the 80-20, meaning you save minimum of 20% and the rest 80% is just expenses. So this is particularly good for low income people or students, for example. But me, I've tried the 50-20-30, was working for me. There's other budgeting strategy. We won't have time to talk about everything today. But it's really, really important. Another thing, the wants and the needs, this is also something that you can do for your business expenses. Every month, sit, do your monthly money date, put it in your calendar, and be like, I'm going to look at my finances and see for my business, among all of the expenses, are they wants or are they needs? Is it something that I need, and I really need to keep it for my business? Without it, it can't function. Or is it an expenses I can reduce or move to a cheaper option or just delete it? Okay, do that work every month, not at the end of the year, because usually at the end of the year, it's already too late. You already spent all that money. Now, budgeting for entrepreneurs. There's the 4 buckets approach that I love. Super important when you separate your personal and business finances. It helps you to plan for the taxes, especially because you don't want to do your business and the year after do your taxes and be like, oh, I need to pay 3K of taxes. I don't know how I'm going to pay it because I spent everything, or, you know. So you have to plan in advance. So the 4 buckets, I'm going to give you that approach, but you can customize it. You have to make it work for you. So the first bucket is operating expenses, whether rent, tools, marketing, supplies, has to be between 50 and 60% of your income, of all of what your clients are paying you. The owners pay between 20 and 30%. So this is your salary. Whether you're incorporated or not, you have to pay yourself first consistently, just like an employee. I understand that sometimes it's not possible to pay yourself. Sometimes you might not pay yourself because you're going to subscribe to this new software that's going to help you make more sales or whatever. But try to pay yourself consistently, okay? Plan for the taxes between 10 and 30%, let's say. You have to set aside for income and sales taxes, as I explained to you. And then the last one is profit and growth fund, between 5 and 10%. You have to save for reinvestment, training, or emergencies. So a tip that you might use is open 4 separate bank accounts or sub-accounts and allocate income as it comes in. Me personally, I'm going to let you know what I do as a financial literacy educator. Whenever I receive, and I'm bootstrapped so far, whenever I receive money from a client, I will divide it by 3. For example, if I receive $1,500, I'm going to put $500 to my salary, so transfer it from the business account to my personal account. I'm going to transfer $500 to my taxes account, my taxes business account. And I'm going to never touch about that account, about taxes. Whenever I need money, I'm going to take money from my personal account. I'm going to never touch at the tax account. And then the last one, the last 500 is staying on my business bank account to pay for the tools, marketing supplies, marketing events I go to, and all that. Okay. So this is what I'm doing for me. And at the end of the year, I'm going to pay my taxes. If I need the money to pay my taxes, then I'm going to use that business tax account. If that I don't need it, then all of that account becomes profit, and I can either reinvest or stay. It can stay on the account, or I can put it on my personal account. And for my personal account, I will invest it in Wealthsimple and invest on an ETF or whatever. Okay, so I don't necessarily do the 4 separate bank accounts, because I'm a financial literacy educator, and for me, finances, I know I have to do it. This is what I do on a daily basis. This is my job. But if you're not like a financial literacy girly, having all of those 4 separate bank accounts, it can't help you to have more clarity in your business. Last but not least, some practical tips. The City of Toronto offers a business toast support center where entrepreneurs can get advice on business registration, taxes, and other startup topics. So I highly encourage you to call them now or before the end of the year, not beginning of 2026. I mean, you can, but beginning of 2026, everyone is about the taxes and all that, and everyone is calling. So now is your time. You have to take the step now to ask them questions about your business. What do you recommend me? What are the things I should do before? Because once you arrive early 2026, sometimes it's too late to invest in this account to have to pay less taxes or whatever. Most of the things we have to do it by the end of 2025. So please ask, call an agent from CRA. They're available Monday to Friday from 9 to 6 p.m. And you can, ask them about your tax obligation, deduction and compliance and all that. They even have like a tax clinic that I volunteered last year where you can do your taxes for free. Of course, it's easier if you're a 9-to-5er. If you already have your business growing and all that, they might not be able to help. But you can still call a CRA agent and talk about, their tax obligation and everything. They also have amazing webinars on all topics, marketing and everything. But here I just mentioned the one regarding taxes and financial literacy. So they have the T1 General Small Business Tax Literacy Seminar. That is regarding when you're a solopreneur. This is the T1, the form that you need to submit. If you're incorporated, then you need to submit the T2, which is the second one. T2 Corporation Tax Literacy Seminar. So those are online. You can just copy paste this on Eventbrite, and they do monthly webinar, which is amazing. And the last one is about money side of business. What are the tools, techniques to manage your financials? So those are amazing webinars. I highly recommend you to go to their website, to go to Eventbrite. They also have like a forum next Wednesday, a forum for entrepreneurs for the City of Toronto. So I highly recommend you to get in touch with them. You can have a call with a business advisor that's going to help you and give you the key if you're looking for grants, for example, or things like this. So I highly, highly, highly recommend you to go to those online webinars. They are free. They are every month, and it's amazing, the resources. Most people, they don't know about it. So I thought I would share. Okay, last thing before we go to the questions. We talked about the mindset. I gave you content and information. Now it's time to go to the call to action. I want you to choose 2 or 3 calls to action that you're ready to implement by the end of this week, by the end of this month, or by the end of the year, or even for 2026. So please share in the chat 2 or 3 calls to action. It could be look for an additional financial literacy resource, a podcast, a book, a workshop. It could be try a new accounting software, review and set the 4 buckets budgeting strategy for your company, upload Wealth Simple or Blossom and start investing. It could be plan to attend another financial literacy workshop, one that I'm hosting on Saturday, for example. It could be set or review budgeting strategy for your personal bank account. You could check how your TFS is invested, check your credit score on Borewell, review your wants and needs for your personal or for your business. It could be share your financial literacy knowledge with a family or friends, or set and forget a monthly saving goal, or even create a WhatsApp group with other entrepreneurs, or a power circle with other entrepreneurs to talk about financial literacy. Okay, so you have to, now that we talked about the mindset, you have the knowledge, you have to take the action to take your journey to the next step. Okay, so do not hesitate to share in the chat 2 or 3 call to actions. Or you can unmute yourself if it's easier for you. And then you can also share what did you learn in today's workshop, what was eye-opening, what was surprising. Yeah, just what did you learn in 2 or 3 calls to action. Feel free to put it in the chat or unmute yourself. Yeah, I see Jenny raised her hand.
Hi, thank you. That was so wonderful.
Amazing.
I
Thank you,
like that.
Jenny.
Yeah, thank you. I think my comment is just that I really appreciate the information, but also I like what you said at the very end here, which is balance because I can be pretty flighty, like I am at one with money and money comes to me and I can do my meditation but I like that you said it's the balance of I know weekly I have to meet with my bookkeeper. I know weekly that has to happen. And if I don't, then I get too behind. And I know that when I get our invoices paid, they have to be separated into accounts. And I know that monthly I have to meet with my CPA chartered accountant. And I know so it has to be balanced with I am at one with money and it comes easily to me and the logical, knowledgeable actions that I have to take. So that's great. Thank you very much.
Absolutely. That's amazing. Thank you so much for sharing, Jenny. And it's absolutely this. We have to have a balance. It can't only be affirmations. We have to have the affirmation, the mindset shift, the information, and then the call to action. So I'm happy to help you. There's Dana. We said I appreciate the guidance on changing our mindset. I appreciate the call to action at the end to help keep us accountable for putting things in action. That is amazing. I have to leave. Oh, Donna, she left, I think. I have to leave. Thank you so much for all this great info, Alexia. Greatly appreciated. I will be putting lots of these suggestions into action. I'm waiting for you, Donna. Please all connect with me on LinkedIn. I put all of my, I put my link tree again in the chat, and then you have my QR code here. Who else? Pam said, I really appreciate your formulas to prepare for retirement. Yes, your financial number, have it in mind. Put it in your, either on your phone or next to your vision board. You have to see that formula every day to be like, oh, I remember I need to fund my retirement. That is amazing. Jenny, she had her hands. Yeah, Jenny, you raise your hand. Yeah, go ahead.
You just remind me of something I want to tell you. The other day, one of the coaches that I'm working with, we were talking about money and I was crying because I moved money, a significant amount of money for me, significant, into a savings account and I was fully crying. And she suggested that I put a stack, I won't tell you how many, it's not that many, of $100 bills on my desk so that I see it, so that it's just a natural thing that there's just money everywhere. And so,
Absolutely.
anyways, it just reminded me I wanted to tell you that. So I did it.
I love it.
Yeah.
Congratulations. Congratulations on taking that step. For your financial journey, you do it for you. We all have to remember that we don't do it for Alexia. We don't do it for Paro. We don't do it for Netflix. We do it for us. Because it's our future. As soon as once we retire, no one cares. No one cares about your financial journey. You have to be the one to take action to fund your retirement, your pleasure, your business, what you want to do in life and your dreams. Thanks for an amazing reminder. Any more questions for me? I put, again, you have my QR code, so please connect with me on my personal LinkedIn, Alexia Kitoko. On the link tree, I have all of my events. I'm hosting a free online event on Saturday. I'm hosting an in-person event on November 13 with another women entrepreneur from Toronto. I'm based in Toronto, so it's in Toronto. It's going to be a game night with other women entrepreneurs where we're going to have quizzes. There's a $500 giveaway. We're going to have games with the other entrepreneurs, do circles and all that. So please click on my QR code. Don't sleep on it, and register to all of those events. And connect with me on LinkedIn. This is where I share all of my events. They are free usually because, you know, non-profit organizations, social clubs, universities, and non-profits such as Sparrow pay me so that you can access this financial education for free. So do not hesitate. If you have more questions, I'm all ears. Jenny has to go. Bye, Jenny. Thank you so much for coming.
Any more raised hands or questions in the chat. So thank you so much, Alexia, for this wonderful presentation. If anybody would like to rewatch the presentation to go over it again, please feel free to send me an email at communications@pero.ca. I have put that in the chat, and we will send you a link to the recording once it's processed. But again, thank you so much for coming, everybody, today. Thank you again, Alexia, and we hope to see you again at future webinars and future events. So have a great rest of your day, everybody.
Thank
Bye-bye.
you. Bye, everyone.